Hi members, it's Nyla from Learn to Trade the Market. This is a quick video. Want to show you guys the Fakey setup. Really quickly, I want to talk to you about a trading plan. It has three conditions. First of all, you need to identify momentum. In this case, an amateur looks at this chart, it's moving from left to right up. It's held the 50% level, which is this line here at 67.65. You can see right here the old resistance becomes support through here and through here. So we've got a bullish existing trend, momentum's up. Let's look for a buy setup. One of my proprietary price action setups is a Fakey, and I'm not going to go into it in detail because I've already explained it in the course notes. You already know that a Fakey is a false break out of the inside bar pattern. But really, the best way to trade is when it aligns with something. In this case, it's with the trend. It's also with this horizontal level here. You can see the mother candle here. Alright, let's just make that clearer. Mother candle, inside bar 1, inside bar 2. This bar here, right here, was a Fakey trigger because it actually broke these lows, shimmied down, and then repelled back up, and that is a pin bar as well. Now often people get confused, Fakey and a pin bar, they're two different things. The pin bar is its own bar, but the Fakey is a combination setup. It blends candles. So we have a move down and then a move back up, and the trigger to go along was obviously just a break of any relevant high here. So we're going to put a line there at the most recent bar's high, and here is a buy on stop order, so it's a buy on stop. Hope that's clear. And then obviously we can place our stop loss below this low here, and we can look for probably a retest of this high, or at least halfway through. And that's as simple as it needs to be. If you can identify the inside bars, which are these ones here, and then we have the false break, which is this tail through here, it moves down, then shimmies back up. It's a buy on stop above the high of the inside bar that was broken. So it has to break the mother candle low, which is this one, and the early trigger is to buy on stop above the inside bar high. Alright, so anyway, I mean, it's pretty simple stuff. All it is looking for a false move, and the Fakey pattern, as I explained it in the course, is looking for a predefined trigger. If I'm to see this, alright, if I'm to see that's an inside bar, it's telling me something, alright? If the trend's moving down, right, you get the inside bar, you probably want to take trade with the existing trend. But as we know, the market's never perfect. You might see an inside bar pattern and then the market moves straight back up and then reverses. And that is a Fakey. It's when everyone gets sucked into this part right here, when the market moves above those inside bars and then reverses. In this case, on this example here, you've had the inside bars here, and the market's just basically said, alright, let's go short, guys. All the big boys are waiting now. They don't take that first break. They wait to see what the market does. And as you can see, intraday it reversed. So it's bang, nice in an intraday chart. It'd be a nice V pattern, and then above that high, it's just absolutely rocketed. And you would think, if I zoom this chart out, see if I can zoom this out. Alright, so you can see I've zoomed out, and really that trend is down. But we've had a nice little bottoming signal here, and you can see the market's trying to rally. The market always tells you what it's going to do, and if I just zoom in and show you, that line there is so relevant, and it was already telling us that it wanted to hold through here at 67.65. So you can see the market will give you clues, and when it gives you clues and forms price action, it's time to go all in, as the poker players say, and take a trade. In this case, it's probably going to return you 2 or 3 times your risk, 3 to 1 risk reward, and that's what you need on every trade, so that you only have to really win 1 in 2, 1 in 3 trades to make money as your equity curve rises. So that's one of the most profitable signals I have, is the Fakey setup at confluence with a trend and a horizontal level. That's when you're going to make most of your money. And so what? If you trade twice a year, and I'm not joking here, twice a year, on one pair. That gives you probably 8 trades a year over the 4 major pairs. This is profitable enough to make money on just that amount of trades and put a full-time income in your pocket if you're trading obviously the right size account, position sizing correctly. I don't trade anything else except the Fakey and the pin bars, and they make a hell of a lot of money. You've just got to learn the charts and learn how to read the horizontal levels and the trend changes. That's the harder part. The setup's fine. That's a concrete condition. It's the other part which you will never be able to be taught. I don't believe that trading can be taught as such. And that's what I say to anyone who inquires on the course. I say, look, trading can't be taught, but I'm going to give you the best introduction and the best shot at learning how price action works, because it's really the only thing that banks look at, the hedge funds look at. They're only looking at a plain vanilla price chart like us. That's how they trade. So I encourage you to really have faith in what I teach you guys. Pull up your majors, your Aussie dollar, euro, Swiss, Japanese yen, and the pound. Follow this stuff, and you will start to see it appear before your eyes, and you'll become confident. Alright guys, I'll talk to you in the next video. Take care.